What is up, traders? Hope everybody's doing well. Today's lecture is going to be, it needs a bit more concentration than the previous ones. Today we're going to be talking about order blocks, and there is various shapes and forms of order blocks. So there's 4 different forms of order blocks, at least for my knowledge. You have the normal order block, a breaker block, a mitigation block, and a propulsion block. In this lecture, I'm going to be teaching the first 3 and not the propulsion block. The reason being is, number one, the whole point of this series is to simplify trading, and I don't want to really overcomplicate things for you guys. Second reason is we really don't need propulsion blocks, or we don't need to know propulsion blocks to become profitable. I rarely ever, if ever, use them. The main things that you need to know are order blocks, breaker blocks, and mitigation blocks, because they are basically the same thing. They're the 3 that we're going to use the most. Propulsion blocks is just no need to know. If in the future you guys want me to teach them, no problem. But for now, we're going to stick with order blocks, breaker blocks, and mitigation, all right? So first of all, what is an order block? An order block can be one candle or a series of candles, right? And basically what it is, let's say, for example, we are in a bullish trend. We said that in bullish trends, we usually have retracements, right? And then a continuation. These retracements, let's assume that the uptrend consists of 3 candles, 3 bullish candles, right? Let's say just assume these are 3 bullish candles. Then the retracement is 2 candles, let's assume, right? Then you have the wicks, let's assume, and then we trade back above to continue with the overall trend, right? Now, these 2 are down close candles, let's assume, right? A bullish order block is basically as soon as we trade above the highest wick of the down close candle. I don't like talking about the close on these. In order for us to consider an order block, we need to trade above or below the entire thing, including the wicks. Okay, so in a bullish scenario, again, we have an uptrend, a retracement. Let's assume it's 1 candle of a retracement, 1 bearish candle, and then we continue up. As soon as we close above the wick, not the candle open, the wick of the down close candle, let's say it has a wick, as soon as we close with a candle above it, this down close candle is now an order block. It can be 2 consecutive down close candles. It can be 3, 4, as long as they are the same candle. So all bearish. They cannot be bearish, then bullish, then bearish. No. The order block is basically the last, in terms of bullish, it is the lowest down close candle. We count that. If we have 2 down close candles, no problem. If we have 3, no problem. If we have 4, no problem. But it is the lowest, we count from it. If you have 1 that's above it, that's also bearish, we count this whole thing. If you have another one that's bearish, we count the whole thing, right? And then as soon as we close above the wick, now this is called a bullish order block. And it's the same thing for bearish. If we have a bearish trend, retracement, we push down. These are up close candles. Let's say assume it's 1 candle, it has a wick, right? As soon as we close below the wick, this is now a bearish order block. So I'm going to show you guys on charts, because for this, you guys need to see charts for you to understand fully. I have some nice examples from today's trading session, actually. So let's go right to them. All right. So here, let's assume we have, right here, we have a uptrend, right? We have push up, retracement, push up. So we have an uptrend, right? See it? Like so. This is an uptrend. Cool. In this uptrend, we have this retracement, correct? So it's this retracement. This whole thing is the retracement, right? In this retracement, I will look, if I'm looking for a bullish order block, I am looking for the lowest the lowest down close candle. So in this case, we have 1, 2, 3 down close candles that are consecutive, right? So this whole thing from here to here is an order block. Let me mark that out. So from here to here, including the wicks, is an order block, right? But this whole thing is an order block, and as soon as we close above the highest one, so here, when we closed here, it is this candle right here. As soon as we closed, that is when we consider this whole thing to be an order block. But before it closed, so at one point, we had, let me show you guys. So at one point, market came down and then traded above only this one. So at one point, this was the order block, right? Because if we zoom in a bit more, you're going to see that at one point, this is the wick, we closed above this wick, right? So at one point, this alone was the order block. And then we can see here how we traced into it, respected it, and then pushed. Here, the order block is still only this. So we can see here how we retraced into it once again. We only include this second down close candle when we close above the wick of it. So we didn't really close until here. So this whole time, the only order block we had was this candle, because it's the only down close candle that we actually closed above. So we can see how we tapped into it here, tapped into it here. And then once we closed above this one now is included into the order block. And now the whole thing is an order block, right? So now the whole thing is an order block. We include it. But at the same time, we also did close above this one, right? The same candle. So now the whole thing becomes an order block. This. So it's the lowest down close candles in an uptrend. And as soon as we broke above, now this is confirmed that this is a bullish order block. So that's a bullish order block. We continue up, continue up, continue up. Let's find another example here. This is another beautiful example. We can see here how price pushed up, retraced, pushed up, retraced. In this region right here, where is the lowest down close candle? Now, we would have picked all of these, but we have an up close candle that's like messing this up. So now the order block can only be this one, because it's the lowest down close candle. If this was a black candle, if this was a down close candle, then this whole thing would be an order block because they are all down close candles. But since we have this one intruding, the order block cannot be these. It's this. So now we mark out the order block from the wick to the wick, the whole thing, including the body and the wick. And we extend that. And as soon as we close above the wick, this is now considered an order block. And we can see here how price closed above, came back down, respected it, and then continued higher. You can see that, right? So that's a bullish order block. Now, a bearish order block is, let's say, for example, it's the complete opposite. I think I have one marked out here. Okay. So a bearish order block is, let's look at this region right here, okay? So this region right here, we have market going in a bearish trend, right? Here, we have, these are all consecutive up close candles. As soon as we trade below this one, this becomes an order block. As soon as we trade below this one and close, this is concluded in the order block. As soon as we close below this one, now this whole thing is concluded in the order block. As soon as we close below this whole thing is concluded as an order block. As soon as we close below the entire thing, this whole thing is concluded as an order block, right? So we can see here with this red line denoted, we closed below this candle right here on this candle, right? So now as soon as we closed, this whole thing, including the wicks, is an order block. And we can see here how price respected and then dropped. And then if we look actually a bit closer, now this is a bearish order block, right? Because we're in a downtrend. If we look closer, you can see another order block right in this region, bearish order block. If you saw it, I have it marked out in the red. So we can see here how price dropped, retraced, dropped again. This is an order block because we traded, let me zoom in a lot for this. This is an order block because you have this up close candle, and then you have this down close candle, which closed lower than the open, right? Lower than the lowest wick, sorry. So now this, as soon as we closed, denoted here in the red, now this becomes an order block. And we can see how here, even this was respected. Now honestly, I didn't cherry pick, but we can say I did kind of cherry pick. I wanted examples that actually worked because I didn't want to confuse you guys in the beginning, because the ones that don't work are basically the mitigation blocks and the breaker blocks, right? So the ones that don't work, you're going to ask me, okay, what if this isn't held, this order block isn't held, and then we break above it? Well, that's where we go to the second kind, which is breaker blocks and mitigation. So